Netflix has finally revealed how much their ad-supported plan will be priced at. So where's the stock headed? Stay focused for the next few minutes as we take you through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. First up, Netflix will now have 4 streaming plans beginning from November, with the ad-supported plan priced at £4.99 or $6.99. People have mixed reactions about the ad-supported tier, with some claiming it to be the end of the streaming giant. Apart from this, their earnings report will be out on 18th October, and we think that it's not gonna look good. Even though Wall Street analysts are bullish on Netflix, its declining subscriber growth in the first and second quarters still serves as a problem, and the company should probably focus on fixing the real issue instead of lowering down their rates and switching their business model partly. Their EPS is estimated to be $2.14 for the third quarter, which indicates a 20% year-on-year decline, with revenue projections at $7.838 billion, marking a 4.7% growth year-on-year. With all that in mind, let's analyze the charts. As you guys can see right here, we're now in the one-day chart for Netflix, and right off the bat, we can see that we've made somewhat of a megaphone pattern over here. Now, if you don't know what that is, let me explain it real quick. We can see that we made somewhat of a megaphone over here, which indicates that we rose from smaller ranges, right? You can see that these candles were pretty small as compared to these candles over here. So this just indicates, rising demand, of course, rising volatility. We can see that we have, rising volumes as well over here. And of course, this is mainly due to the earnings report on 18th October. We all know that it would be either a make or a break day for the stock, and that is why most people are placing their bets now, in case that, if the bears are shorting the stock, they're shorting the stock in the hope that the earnings report will be negative, and the bulls are buying the stock in the hope that the earnings report will be positive. So, well, where exactly will it head? In my opinion, the earnings report will probably be negative. And when I say negative, I don't mean that the earnings report will be pretty much a loss. I just mean that, it will be kind of an underperformance as compared to what analysts have thought for the stock. So in my opinion, I have some really important things to show you. Over here, we can see that so if we talk about where the stock is headed, well, we can clearly see that we have a support level over here, a pretty strong one as well, around $210, right? We've tested it over here and over here as well as over here. So if we test it once again, in my opinion, the stock will probably break it. Now, on the earnings report day, I believe that we will probably be somewhere around here as well. So if the earnings report, of course, is negative, right, as I already told you, I guess I told you that the earnings report will be posted in the aftermarket, or, rather just when the market ends, right after the market closing. So that would mean that 19th October would be really volatile. Overall, I believe that the bearish run for Netflix has pretty much ended, because we can see that we held on to this range pretty well, right? And even though we fell by quite a lot, well, this is not even loading, I'm sorry for that. If we talk about the resistance levels, we can see that we have a resistance over here somewhere around the $250 range, of course, and then somewhere around the range of over here at $235 to $40, I believe. We have some small support zones as well, like here we made a double bottom at 223. So with that, I believe that the Netflix stock, as I already told you, I don't really believe it will perform well in the short term, right? That, of course, is with the market, right? It's not anything out of the blue. The entire market is performing badly because, well, we all know that the September CPI report was pretty unexpected, I would say. So I would probably stay away from trading the stock in the day trade part. But if I were to make a long-term price prediction, it would probably be somewhere around $300, and that would probably be touched in 2023 by the year end. That is my opinion. But with that being said, let's jump into the 1 hour chart to analyze some swing trades. As you guys can see right here, we're now in the 1 hour chart, and this should give you an idea of what the volatility in the market looks like. As you guys can see, we had major gap ups and gap downs over here and over here as well, over here, right? And of course over here in August, but that doesn't matter anymore. But we can see that the stock is making pretty much like a semi head and shoulder pattern over here, right? So if we take this as the first shoulder, right, which pretty much is unusual, I would say, but it does count in my opinion. So if we look at the short term part as well, the past week's performance, we can see that over here we got hit by this resistance level over here at 223.6 pretty much, I believe, 223.5. And we got supported a lot of times around this 212 range. Of course, we can see that on 11th, we had a pretty normal day in my opinion, right? Of course, we opened in a gap down, so this was a negative day. But this part over here was pretty much normal, right? We got, three green candles, we got two green candles, or rather two red candles over here, right? A green candle to close off the day. So this pretty much indicated just buying and selling. If we look at the day after that, this seems a bit more interesting than that because we can see that we opened in a, well, it's not even a gap down or a gap up pretty much, right? But we did get a lot of volatility in the first candle. Let me erase these drawings real quick. But over here, we can see that we got some indecision, which resulted in this massive gap down. And after that, of course, the next day was entirely bullish. After that, we can see that we got a gap up, I believe. And after that, we got, yeah, of course, we got a huge gap up. And after that, of course, we fell down. So this was 14th October. And this was Friday, I believe. So this day did not hold up pretty well, but it did hold up well as compared to other stocks, as you guys can see over here, right? I guess Tesla suffered a huge hit, yeah. So 7.55%, 5.5% for SoFi. Those are some huge bearish numbers. So it does indicate that Netflix is kind of strong and it's pretty much holding well to the inflation numbers and all of the negative factors itself. With that being said, let's jump into the 5-minute chart. As you guys can see right here, we're now in the 5-minute chart. So let me clear out these drawings and real quick, we can see that on 13th October, this is what happened, right? So we got a reversal scenario over here, two bullish candles, one bearish candle. After that, of course, we got a huge green candle. Then we saw a pin bar candle over here, right? Even the selling pressure candles were, pin bar, and they indicated that there is good buying pressure, right? Sellers were trying to push the candle all the way down over here, but the buyers did reiterate and, take control of the market. And after that, of course, we can see that we continued to make higher highs and higher lows over here as well. Of course, we did make somewhat of a pretty much a similar high over here. Let me get a horizontal line. We can mark this level. This would be important. $218 seems to be an important resistance on the short-term charts. After that, we can see that we did get, kind of resisted over here at this range of 225, right? 225.4. But at the same time, we can see that we have some support levels nearby as well, right? For example, over here at 221.35. And of course, after that, if we look over here, we got a massive green candle and some, great volatility. So the bull run pretty much continued the entire way. And if we talk about 14th October, we can clearly see that we got a negative reversal scenario this time, two bearish candles and one bullish candle. After that, the buyers did try their best to make a pin bar candle, but they ended up making indecision over here on 9:45. And after that, of course, we can see that we continued to get supported by this level over here at $230, 230.5, and after that, of course, 230 over here, right? But it was not enough, right? We fell at the end, and of course, the range in general was pretty bearish. This indicated that we kind of squeezed into this range, right? And this was exactly what was missing in the 1-hour chart and the 1-day chart, right? You can see that we kind of squeezed into this area perfectly, and we did have a top over here at $236. So let me mark that as well. $236. We had a top at 238.9. We had a double top at 233.6, and we had our last top at somewhere around 231.5. So if you ask me what's my Monday prediction, in my opinion, the stock would probably open in a gap down again, considering that we've squeezed into this range. I cannot think of a better scenario than a gap down since the Netflix stock did hold well for this day. So a gap down would indicate somewhat of buying pressure and we might get into this range again, right? We'll probably fall down over here, go up again, or rather in a different scenario, we would probably go up and come down and then go up again and form a perfect bullish trend, but I don't believe that would happen. But then again, remember that this is just my own opinion and definitely not financial advice, so you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos, and as always, I will see you guys in the next one.